Good morning, good afternoon, good evening to all from wherever you're joining this event on economic change, finance, trade, and investment in Africa post COVID-19, organized by the Firoz Lalji Centre for Africa at the London School of Economics and Political Science. The center is a unit that is dedicated to teaching and research on Africa, outreach to African partners, and more broadly, the promotion of discourse on Africa, such as what we're doing now. My name is David Luke, and I'm the moderator for this event. Let me begin by placing our event in today in context. The economic impacts of COVID-19 are far-reaching across the African continent. African economies are generally in recession. The response from the G20 for debt relief and financial support has been somewhat tepid. There has been at least one default on foreign debt, Zambia, and fiscal space for stimulus packages has been limited for support to struggling businesses during this crisis. Simultaneously, steps are being taken around the continent to ratify and implement new policies to spur trade and investment, such as the African Continental Free Trade Area Agreement, which as of last weekend had 34 ratifications, the latest being Nigeria, the continent's biggest economy. So whether it is a booming fintech industry in Nigeria, innovative digital solutions in Ghana, a move towards financial sector liberalization in Ethiopia, regionally focused banking in Kenya, and increasing attention to sustainability in general, we should also note the astonishing development during 2020, which just a few years ago would have seemed far-fetched, and that is the potential for an African woman to become the first female Director General of the World Trade Organization. All of this seems to signify a transition for many African countries. With strong evidence of integration in African financial markets, the COVID-19 pandemic presents unique opportunities to innovate. At the same time, the underlying structure and resilience of these markets have come into question as they recover from the economic downturn of 2020. Leaders in business, banking, and finance have used such tools as green financing to impact challenges facing the African continent and to contribute to the sustainable development goals. This event is, I should also mention, is being organized in collaboration with Silk Invest, and it has brought together thought leaders on finance, trade, and development to discuss strategies for contributing to the sustainable development of the continent in these sectors, especially as we're now beginning to see some light at the end of the COVID-19 tunnel. So in this event, we will explore such questions as how has COVID-19 impacted African economies? What can African governments do to stabilize their economies in response to the pandemic and in the current trade environment? And going forward, what role can the financial sector play in the growth of African economies? How can the public and private sector work together to address issues of sustainable development? And what impacts can regional and continental powers have on overall progress? Our speakers are going to speak in the order of their last names. And now it's my pleasure to turn to our first speaker, Zin Bekali, who is the founder and CEO of Silk Invest, who would make the first intervention. Each speaker has about 5 minutes for the intervention, and then we'll have about 10 to 12 minutes for a discussion among the speakers before we open the floor for a Q&A. And just very briefly, let me introduce Zin, who is a well-established investment manager covering frontier markets and in Africa. The firm, among other things, manages a frontier markets equities strategy and a Pan-African private equity fund. Prior to Silk Invest, Zin has, among other things, worked for Fortis Investments, Bain, and ING Investment Management. Zin holds a Master's of Science in Operations Research and Management and a Bachelor of Econometrics from the University of Amsterdam. Zin is a CFA charter holder and he completed his executive MBA at the London Business School. So Zin, let me turn to you. You have the floor for your intervention.
Thank you very much, Dr. Luke, and thanks also for everyone at LSE to give us an opportunity to talk about something that's very dear to us, obviously, and we hope that this conference will hope to get more attention to really investments in Africa and the need for that. I prepared a small presentation which I will start now, and we will take it from there. So let me share my screen with you. So I will leave the introduction off, but as a firm, we have, as Dr. Luke said, quite a well-established structure across different African countries and frontier markets. In terms of really the story that I wanted to highlight, and it will be very brief, is first to really just to take a step back and really look at how Africa has done through this COVID crisis. And what's very interesting to highlight is that Africa has been, from a health point of view, done relatively well. The policies that have been implemented in Africa have been very strong, and most of the countries from a health point of view have been least affected. Of course, some people highlight the fact that Africa's population is younger, but still in general, from a health point of view, I think that Africa can be very proud of the way they have handled the situation and have limited both the number of cases and the number of deaths related to that. Unfortunately, the effect, as has been highlighted in terms of the economic impact, has been significant. And that has to do with two things. Of course, we are living in a world which is connected with flows going from one place to the other. Africa is relying on outside trade and outside investments. And of course, that has been affected. The lockdown has also been a big impact into the local economy. And the fact that they have not been more conservative in their support of the corporate sector was another drag on growth. That said, even with all those type of things, Africa's recession was relatively mild if you compare it with the rest of the world. I wanted to highlight really some of the things going forward post-COVID on the next few years. What are the things that we think investors should look at and investors should focus on? The first and foremost is really the youth opportunity. We truly believe that youth is a huge opportunity in Africa. 60% of the people in Africa are below 25 years. 75 is below 35 years. In fact, 22% of all the young people in the world live in Africa, and that number will gonna go up to 31% in 2040. So I think that is something which is very important to highlight, is that youth and youth employment and anything that has to do with youth should be on the top of the agenda for all the policymakers and investors. Youth unemployment in Africa has not been, went down between 2000 and 2008, but then stopped going down, stopped decreasing. And that is something which is a big problem. If you compare Africa with low income countries, youth unemployment is a big issue. Similarly, if you look at gender inequality or gender equality, in the past, actually, Africa used to score relatively well. In the youth, more women were employed versus men, but it seems to have been switched over the last few years. So those two things, youth employment or youth in general and gender, are two big topics that needs to be looked at. In terms of investments, there are many points that we can highlight, but I wanted to highlight two things which are important. First, a lot of private equity capital focus in Africa today is targeting and focusing on big size tickets, because a lot of PE funds in Africa are very big. They are very big funds. And by doing so, they also have big sizes, big ticket sizes, which is a problem because 72% of Africa's corporates have a revenue base below 25 million. In fact, I think that is conservative, and I would love to hear the other panelists talking about. I think probably 80–90% of Africa's corporates, the SME is SME and has a revenue base of 25%. But only 10% of Africa's PE funds have a size below $100 million. So there's a big disconnect between those two things. Similarly, and that is something which is I feel very strongly about, is that the investment funds typically, I would have almost like an expat bias. So they tend not to always focus and appreciates sufficiently indigenous business models. We as a firm, we really like that. We truly believe that the best opportunity is an opportunity where local entrepreneurs are servicing local consumers with local products using local supply chain. So we believe indigeneity is a very, very important part of what investors should look at and what's very important going forward. I will end with two things to also highlight in terms of what that does mean. So first, if you look at Africa today, it's increasingly more and more relying on, let's say, loyal money. So if you look at today's foreign flows into Africa, a lot of it is remittances. So the remittances flows moved from around 10 billion to close to 90 billion in the last 20 years. So there's really a huge increase. So increasingly remittances and immigrants are playing a very, very important role into Africa. And that is something which shows this type of localization of flows. More importantly, and that is something which to highlight and not to brag or anything, is that as a firm, we have been very proud and very lucky to test this and see what is the impact of investment. There is a huge investment impact for people to invest in Africa's SMEs. You can really do well, both financially and have a big impact. And if you look at as a firm, we have invested through our first private equity fund in a company called Sundry Foods in Nigeria. Over that period of time, revenues increased 10 times. And that company has been able to generate close to 2,000 new jobs within 8 years. So it really tells you that a relatively small amount of money can be catalyst to big growth in terms of both employment and revenue base. And that is something which we look at. And this company specifically, the way they did it is they are a restaurant chain where they have local menus with local food in Nigeria, where they source most of their supply and raw materials locally. Their headquarters is local, their management team is local. So those are type of things which are very, very important and have been very good for them and give them that sustainability in their revenue base, even during difficult times. So I'll stop here. Just to summarize, I think Africa has gone through a relatively mild crisis, but at the same time, mild is very bad for Africa because they don't have the financial resources to deal with this type of crisis. At the same time, investments are very critical for Africa's development and conversions, and especially if you can focus that to support local business models. You can really have a big, big impact if you do that well. I will stop here. Thank you very much.
Thank you very much, Zin. I think this has got off us to a very good start, in particular in looking at this example of Sundry Foods Nigeria, the opportunities that are there to utilize a local business model to engage in national, and I would also say regional value chains, and that at the end of the day, all of this is also can be quite profitable. Thank you very much for that. I'm sure we'll be coming back to the issues that you have raised. The next speaker is Sangu Dele, who is CEO of Africa Health Holdings and chairman of Golden Palm Investments. Sangu graduated with a BA, an MBA, and Doctor of Law from Harvard University, and a master's in international human rights law from Oxford University. He is author of Making Futures, Young Entrepreneurs in a Dynamic Africa, and he serves on several boards, including Petty School, Harvard University, Oxford University, Ashesi University, and Pharma. So Sangu, you have the floor to make your intervention.
Thank you, Dr. Luke, and thank you for the organizers for inviting me. COVID-19 has been, I think, I was having a conversation with the president of Harvard, and he said something that I thought was quite interesting. He said this is, with the exception of climate change, COVID-19 is probably the only event after the 2 world wars that is affecting every single person all over the world simultaneously, right? The only other phenomenon we can think of that's having that sort of impact would be climate change. So 2020 has been quite the year for everyone. It's disrupted, as Zin showed in his presentation, it's wreaked a lot of socioeconomic havoc. right? And it's created a lot of macroeconomic challenges. But there is some, there's some silver lining. So if we unpack, right, the problem sometimes with data and the aggregation of data is averages smooth out what's really going on. So if we dig into the data and we start to unpack, I think there are a number of interesting things going on, and I want to highlight 3 of them. The first is COVID has created a situation where we are seeing a massive acceleration in the shift to digital, because COVID has forced everybody to go digital. You don't have a choice. My father, who's a bit of a digital dinosaur, who only knew how to use a phone by picking it up and hanging it up, now is doing mobile money on his phone, which amazes me because, I've tried for 10 plus years to try and teach him to send an SMS, and he wasn't able to. But COVID finally created a situation where he and everyone else was forced to go digital. This matters because you're starting to see an explosion in opportunities in the tech landscape. Within the past month, Paystack, a Nigerian fintech company, which has only been in existence for less than 5 years, was acquired for $200 million by Stripe, right? We've seen the likes of M-Pharma, which was able to leverage their digital infrastructure and was able to help many African countries source PPEs, set up labs to test, right? Because they had this infrastructure, they had all the data, and they were able to capitalize on that. Flutterwave, another fintech company based in Nigeria, was able to realize that, look, we can actually create an opportunity to expand e-commerce, and created the Flutterwave stores and saw thousands and thousands and thousands of the SMEs, which Zin spoke about, right, was able to create an opportunity and a platform for them to tap into e-commerce. And you're seeing that across the board. For us at Africa Health Holdings, we had a telemedicine product that we designed, which was end-to-end, called My Care Mobile, which would not just come in and you don't just do a virtual consultation, but someone will come and take your lab results wherever you are, and it will all go into the app. We were trying and struggling a bit to try and get people to adopt those sorts of technologies. And then COVID comes and we have a 20x jump in traffic. And even though the government has lifted the lockdown, we're still maintaining that traffic because people have now realized that, this digital thing makes sense, right? There are ways in which it offers convenience and it offers a lot of advantages over the old ways of doing things. So that's a nice transition to the second part of it, which is, so the first being digital. I think there's huge opportunities for digital. The second, healthcare. COVID suddenly made everybody woke up and said, wow, healthcare matters, right? Across the board, public and private. You now have, I saw a cartoon meme where a minister in an African country was sick, and they carried him to a hut, and he said, no, I need medical care. And they said, Mr. Minister, this is your project, right? This is the healthcare system you built. And the point of the joke being that COVID really showed us that we can't even speak about economic growth if we do not have viable healthcare systems, because COVID showed the link between the two. And on the private side, you're seeing people care more about their health. We're seeing it in our numbers in our healthcare facilities, that there's more momentum for healthcare. And it's exciting because I think it would create a catalyst for us to invest in the healthcare infrastructure needed to take our continent to where it should go. And then the final thing, which I wouldn't dwell on because I'm conscious of time, I'll spend just under a minute on, is the past 10 years has been rhetoric on globalization, globalization, globalization. And then COVID hits, and we suddenly realize that globalization is great, but there are some caveats. When supply chains are in disarray, when suddenly the medication you need or protective gears you need are being produced by China and they're going to prioritize domestic use, or when France and the US are buying up what's needed. I mean, you're seeing this already from the vaccines. As the continent, we realize that this is a massive disadvantage for us. So I think that there's an opportunity to build manufacturing, and there's an impetus, there's a national security impetus to ensure that for some of the basic things, we need to have and build those capabilities to manufacture that, so that when we have this sort of disruption of global supply chains, we do not create these sorts of risks for our populations. And so I also see within certain essential verticals, I see an opportunity for manufacturing and an opportunity for supply chain. And we're already starting to see that, whether it's in the manufacturing of some of the PPEs, which a number of countries have started to do, or in Ghana, where I'm calling from today, where we've seen a massive push for the manufacturing of local pharmaceuticals. So those are the three things that I see create huge opportunities: digital, healthcare, manufacturing in specific verticals. And with the launch of the Africa Free Trade Agreement, hopefully next month, I think that would also be another impetus for all the above mentioned. Thank you.
Yeah, thank you very much, Sangu, for those 3 points. I'm sure we'll come back to interrogate them, including inequalities, of course, in relation to the digital divide, not only globally, but also within national boundaries. Inequalities also in relation to healthcare, I think you touched on, but tremendous opportunities. According to one statistic, about 14% of global spending on healthcare is in Africa, which tells you that there's enormous opportunity for investment in healthcare. And then, of course, this reshoring that I think is beginning to appear as an antidote to globalization and so on, and the opportunities that also generates. Thank you very much for these insights. Now it's a pleasure to turn to our third speaker, Lily Sommer, who is a trade expert, a trade policy expert at the Africa Trade Policy Centre at the UN Economic Commission for Africa. Her research is on African trade policy with a focus on the linkages between trade and industrialization, poverty and gender. She has published widely in the fields of development and trade economics, in particular on issues related to the African Continental Free Trade Area, informal cross-border trade, e-commerce, industrial policy, and the Sustainable Development Goals. Prior to joining UN Economic Commission for Africa, Ms. Sommer was a senior economist at the Macroeconomic Department of the Ministry of Finance, Planning and Economic Development in Uganda. She holds an MSc in economics from the London School of Economics and Political Science and a BA in economics from the University of Cambridge. Lily, it's a pleasure to introduce you as a colleague also. You do have the floor.
Thank you, David. It's a pleasure to be here today, and thank you to the organizers for the invitation. So I'll focus my intervention on the trade and investment implications of the pandemic. And one thing I just wanted to emphasize from the outside is we've really seen that COVID-19 has served a blow to both trade and investment on the continent, although this hit perhaps has been less than some initially projected. So Sangu's already spoken to the COVID-19 induced breakdown of supply chains, and we've seen that this has been heavily felt in the African continent. So if we look at some of the data emerging, we see that Africa's exports declined by about 35% in the second quarter of 2020, which of course is quite significant. Africa's imports declined by 25%. So in addition to the story around commodity prices, of course, a leading factor behind this has also been the significant disruptions to global supply chains. And we recently released a report on this at ECA that really looks into the lockdown restrictions and the regulations to cross-border trade and the spikes in export bans that have contributed to some of these trends that we're seeing. And this really has left Africa in quite a difficult position, particularly because the continent's very heavily reliant on imports from the rest of the world. For example, if we look at the pharmaceutical sector, pharmaceutical imports, the Africa imports are about 96% of its pharmaceutical products from outside the continent. Similarly, it imports about 82% of food items from outside the continent. So when it's difficult to import these items due to shocks, whether it be a pandemic or other shocks, this does leave Africa in quite a vulnerable position. On the issue of investment, we've also seen quite a big impact of the pandemic on investment in Africa. So according to UNCTAD, for example, the trend of declining foreign direct investment to Africa is really set to exacerbate significantly in 2020 amid the jaw shock of the pandemic and also the commodity price shock, particularly for oil. So FDI flows to the continent are forecast to contract by between about 25% and 40% based on GDP growth projections, as well as a range of investment-specific factors. So again, for investment, this is quite a significant decline that we're looking at for the continent in 2020. And one of the other issues I wanted to just emphasize is that building back better will really require doing more than getting African economies and livelihoods back to where they were before the crisis. So we really can use this crisis as a critical time to reflect on what isn't working and what can be done better. And this includes in the area of trade policy. So trade policy will really need to be revisited and redesigned to enhance the resilience of Africa's supply chains moving forward, to mitigate contagion during future systemic crises, and really encourage continental cooperation and solidarity in a world characterized by increased protectionism. And I think what the pandemic has really done is to strengthen the case for developing robust and resilient intra-African supply chains. And I just wanted to highlight two quick key points here. So the first is that rapid and ambitious implementation of the African Continental Free Trade Area will be really key to hasten the recovery from COVID-19 and also inoculate Africa against future adverse shocks. And amidst the pandemic, we've seen that African member states have fittingly focused efforts on protecting lives and economies. And the start of trading date for the CFTA has been pushed back to January 2021. But at the same time, COVID-19 has also provided a time for policymakers and the private sector to reflect. And there's now an understanding that the CFTA is really needed more than ever to help African countries rebuild and bounce back stronger in the future. And then the second key point I wanted to emphasize here is that to complement the CFTA reforms to reduce intra-African tariffs, efforts will also be required to ensure the smooth flow of goods and services across the continent. I think what we've really seen with the pandemic is that the pandemic shone a spotlight on Africa's long-standing challenges related to border operations, customs cooperation, and trade facilitation, but it's also created an impetus to do better. And this presents an opportunity to reinvigorate efforts targeted at overcoming some of these challenges. And through magnifying some cross-border inefficiencies, the pandemic has increased the urgency to do better and find solutions. And we've particularly seen this in the area of digital solutions, as already emphasized by Sangu. The pandemic has induced advancements in e-commerce, digital payments, digital contact tracing. And at the UNECA, we're really underscoring the important need for the continent to maintain and upgrade these solutions post the pandemic to really lower trade costs and boost competitiveness, and also support resilience against future shocks moving forward. And one of the key things we're calling for in this area is for the upcoming CFTA negotiations on e-commerce to be fast-tracked so that Africa's exporters are really less at risk of losing access to markets in future crises. So I'll stop here and I look forward to further discussion.
Thank you very much for that, Lily. I think you've added a bit of realism also in going through some of the data on how badly the pandemic has impacted African economies, the challenges that still to be faced, including in regard to FDI flows, the opportunities as well. And here you echo others who have spoken before you, Sangu, as well as Zim, on the opportunities that are evident and could be built upon in building back from the pandemic. So thank you very much for that. We'll be coming back, I'm sure, to some of these issues. Now I have the pleasure to introduce Adamsu Tadesse, who is an international banker and business leader with experience at board and executive levels globally and in Africa. He is currently the president and chief executive of the Eastern and Southern African Trade and Development Bank, the TDB, formerly the PTA Bank. Since he joined the bank in 2012, Mr. Tadesse has launched new business operations and spearheaded critical reforms, which have led TDB to transform its ownership and risk management structures, expand its partnership network, grow its assets from 1 billion to 6 billion, 6.7 billion US dollars, and drive higher impact in the 22 member states it serves. Previously, Mr. Tadesse was Executive Vice President at the Development Bank of Southern Africa, where he served for over 10 years and was responsible for international finance and corporate strategy, among others. He has also worked as a senior advisor and specialist with various funds and international organizations, including in New York. He's a recipient of several distinctions and awards and serves on several boards and industry bodies globally. Recently, Mr. Tadesse was recognized as the 2019 African Banker of the Year. He holds an MSc from the London School of Economics and Political Science and an MBA from Wits Business School. He's also an alumni of Harvard Business School and Western University. Admasu Tadesse, you have the floor.
Well, thank you very much, Dr. Luke, and a pleasure to be here on the panel with colleagues. It was a very kind introduction. Thank you for that, Mr. Moderator. Let me just maybe say that my sort of intervention comes conveniently towards the end. I think a lot of excellent perspectives have been put across by the panelists. I think what I'll just do maybe is kick off with a few remarks on TDB and then maybe just offer some insights on some of the issues that have been raised. First of all, the Trade and Development Bank is a third generation development finance institution. We're very specialized in trade. So some of the issues that Lily and others have referred to are our bread and butter. So we have seen the very dramatic pullback this year in trade flows. And of course, our financing has followed the same trend. But of course, we don't just do trade, and that's what makes us a little bit different in our industry. We do short-term trade finance, but we also do multi-sectoral development financing, supporting corporates and SMEs, and also PPPs and project finance structures. Very active across multiple economic sectors, so we're almost sector agnostic. So we have a very interesting scope. That makes our work quite interesting. Maybe just quickly, just to talk about the context of COVID-19 and how that has affected the landscape, the business landscape that we're operating in. First of all, I think Sangu has clearly highlighted some of the key issues that have emerged this year. I think, first of all, we've seen some sectors that have had a bounce to them unexpectedly, pharmaceutical being one, right? Not just the PPE side, but even clinics, hospitals, health infrastructure has not really been a big priority over the years. This was a wake-up call for many countries. And some of the projects that we were talking about some years ago very quickly came to the forefront. And of course, it was helped by the fact that special purpose financing was made available. Health all of a sudden became a priority. So it was easier for various stakeholders to access finance on preferential terms for the particular sector. So that's the healthcare sector. I think the digitization sector as well, I mean, if you can call it a sector, has also been a big winner, right, so to speak. It's not always the case when you have major recessions that the innovation and fintech space, rises. It's usually a casualty of major pullbacks. Those of us who remember the previous big global crisis, there was always a big set of casualties arising from the IT.com and fintech space. In this particular crisis, fintech, ICT has been generally a winner. In terms of mobile phone companies, they've seen a huge surge in data business That has helped them, of course, compensate for the loss on the voice side of things. And of course, the fiber optic cable companies and then the data warehousing companies, with the digitization rising, there was just so much more demand. And a lot of the base cases moved up to higher cases. So that was another sector that really got a nice boost. But when you talk about ICT doesn't run itself, right? It's very dependent on power. And so that's another sector that's had a little bit of a boost, because clearly that is an essential sector. Whether you're working from home or working from wherever, power is essential. And ICT, of course, has also clarified the premium of connectivity in terms of power. And so we've also seen some very good traction in terms of power projects. The commodity sector, as we know, has been one of the heaviest hit, at least in the early months. But there's one or two areas that have actually been resilient, specifically gold mining. Gold, of course, has gone up. So there's been a number of African countries that have found that their endowments in gold have placed them well. So we've seen a number of projects actually receive even greater attention in this difficult environment. I think the general pullback we've seen in a lot of the other sectors have been very painful for quite a few countries. But I think it's also put the spotlight back onto agriculture and having more of a self-sufficiency agenda in that specific space. I mean, if there's one thing that Africa should be able to do, as we all know, is feed itself, right? The last thing Africans should be doing is importing food. Food is the easiest thing to grow and to make and to sell. And so I think the African Development Bank and ourselves and others very passionate about closing that particular gap. About half of the world's uncultivated arable land is in Africa. There really is no excuse for Africa to be importing huge amounts of food when they actually have so many constraints in forex. So I see agriculture as receiving a very big stimulus as a result of what has happened, because of course the pullback and the collapse of supply chains at a global level has put a premium on local production and also enabled regional players to start being more aggressive in terms of filling the gap that has emerged, not just in terms of primary, but also agro-processing, because that is where I think the AFCFTA actually holds a lot of promise. You do have scale economies that kick in, and you can have a lot of industrial plants that deal with agro-based commodities that can be developed and produced efficiently within the region. So those are some of the sort of highlights in terms of the effects. Of course, on the macroeconomic side, we've seen a lot of stress. I think the debt issues have been debated extensively this year. Thank heavens, the World Bank, the IMF, the G20 have all come to the party and really done an admirable job in terms of providing some breathing room for Africa, right? Because it was always very clear that Africa wasn't going to have the kind of fiscal envelope to help mitigate these very deep impacts that came unexpectedly. So I think the one way that the world recognized was important to work with Africa is to at least help reduce the payments on the debt side, right? And I think credit is due to the global FIs who actually did respond to this particular call. We have followed suit as well. As TDB, we've undertaken forbearance measures. We've reprofiled some of the sovereign facilities that we've had on our books, gave countries some more space to redirect their scarce dollars to import, essential commodities so that they can respond better to the crisis. And so these have been some of the measures we've undertaken, but we've also believed it's very important not to pull the carpet from underneath existing clients and partners who've had projects either under implementation or ready to go. And that's sometimes, a second order effect where you see these types of projects being subjected to turbulence for no fault of their own. So we made sure we kept the lights on and stepped forward and ensured that the liquidity and the funding flowed to those projects that were relying on us as a development financing partner. So that's why, even though it's been a tough year and negative growth all around us, it's been a positive year for us. We've managed to actually continue to grow our financing offerings to the region. And very similar to what Zin was suggesting, we've always recognized that SMEs, especially those that work within the local economy, tend to be a little bit more resilient because they're not so dependent on the supply chains, the long supply chains that go global. So those SMEs, of course, have been very needy of support, and we've made sure that we also step up our working capital to SMEs by giving special purpose lines to some of the commercial banks in the countries who are specialized in reaching out to smaller borrowers. And so that has also been an important measure for us. And that has helped at least to ensure that there's no permanent damage being exacted on this very important part of our African economy. I think Lily has talked about the Build Back Better agenda, where at the end of 2020, we're all keeping our fingers crossed that 2021 will see a bounce sooner than later in the year. And we're all gearing up to see how best we can all do our parts. And we've moved into our base case. We were in a low case scenario a few months ago, and we're now in a base case. And who knows, if things move quickly on the vaccine front, we might move to a high case by the middle of next year. And so we're looking forward to working with donors, international funding partners, also with special purpose programs. I'm actually in Addis as I speak to you today, and I'm here to sign a very interesting agreement with one of our G7 partners who are working with us to roll out a special job protection program here in Ethiopia. And we'll be working with a number of big commercial banks here to provide special purpose facilities to SMEs, just to ensure that they can keep some of the jobs going and give them some breathing space in terms of capacity. So yeah, I think I'll stop here and then maybe come in again if there's an opportunity. Thank you.
Yes, indeed. Thank you very much, Admasu. And I think in a way you've rounded out the other interventions, giving us very much a financial institution perspective on what has been happening in the real economy, the sectors that have done well during this crisis, in particular, as you say, the health sector, echoing what Zin and Sangu also said, digitalization, what everyone on the panel has been talking about, and certain commodity sectors, including, as you say, food supply chains, evidence of resilience. And really ending on an optimistic note that we could expect to see a strong bounce back next year, given that the effect on economies has not been as devastating as it was earlier thought. But of course, within this, we know a number of issues that African countries still need to pay attention to, fundamental problems. I think power was mentioned, that even as we go and look at digital solutions, the power sector, energy remains a challenge in many ways. So I think this is a time now for a conversation among the panelists, and I'll do the best I can to see how I can get you to interact. One area really that I thought has not come out in the presentations is equity, inequality, and how different parts of African society have actually weathered this crisis. I think we all know that as we talk about digitalization and all the possibilities that, as I alluded to earlier, that there's a massive digital divide within African countries. And there's even evidence that this digital divide within African countries is also between genders in terms of access to digital equipment and so on. So I think that perhaps this is one area that we can talk a bit more about. Lily also highlighted challenges in regard to cross-border facilities, whether it's customs, it is red tape, it is trade facilitation, and so on. Increasingly, as African businesses look for to have a stronger supply chain from within the continent, these are issues, of course, that need to be addressed, and it's on the agenda of the AFCFTA, but nonetheless, I think we can interrogate them a bit more. And then there's this question of financing. Here, of course, yes, I think the G20, the IFIs did come alongside, but I think there are many a finance minister who would say that it's not been enough. A quote that I like from the Ghana finance minister that appeared in the Financial Times, he's quoted as saying that at times he's felt like screaming that to get the foot off his neck, so to say. So, you know, there's that aspect as well. So I just throw this out for us to have a conversation, perhaps for the next 10 to 12 minutes before we take some questions and just get your take on these issues that have raised and others that you may want to bring up. Perhaps we could start with you, Lily, since we do generally go ladies first.
Sure. No, thank you. Thank you, David. Perhaps I can just say a few points related to the important issue of inclusion that you mentioned. Perhaps first, just to emphasize that I think one additional challenge that the pandemic presents is that it's also exploited and exposed the structural inequalities that systematically disadvantage women and girls, particularly those who live in developing countries. We know that many women are employed in the hardest hit sectors like entertainment, tourism, retail, smallholder farming, as well as the informal economy and migrant workers. Women and girls have less access to financial services. Gender-based violence has also been significantly on the rise amid the pandemic. So I think really this crisis is very deeply also a gendered crisis, and it also holds an opportunity to rebuild systems and societies in a more inclusive way that can help communities around the world achieve the Sustainable Development Goals and gender equality goals under the SDGs. But it will be really imperative to act now as short-term and longer-term recovery measures are being developed and put in place. The COVID-19 crisis offers governments, policymakers, and advocates for women and girls' rights an opportunity to really learn from past progress towards gender equality to create a new, more inclusive social model. At the UN, we're now looking at incorporating COVID-19 learnings into our support for mainstreaming gender within CFTA national implementation strategies. And this is really crucial for us. We're also designing trainings on gender and how women businesses can really utilize opportunities under the CFTA within the recovery process. And then perhaps one just other brief area to flag on inclusivity. Another key point here is informal cross-border trade. We know the majority of informal traders on the continent are women, but so far in COVID-19 management responses, informal traders have been completely overlooked. So most COVID-19 trade facilitation guidelines are largely targeted at transporting goods across the borders using trucks. But this, of course, overlooks a large section of Africa's traders that move across the border informally on foot. So at ECA at the moment, we're working very closely with the African Union to develop continental trade facilitation guidelines amid the pandemic. And we've included a dedicated section on informal cross-border trade to really ensure that these vulnerable traders are also reflected within COVID-19 border management responses. So I'll stop here. I'm happy to take further questions.
Sure. Zin, perhaps you would like to come in also on these issues. I quite liked the example you gave of Sundry Foods in Nigeria. Perhaps also just how to give us further insight on how such challenges as energy, infrastructure, logistics, red tape, how these are being navigated, as best as you can.
I think before going there, I think it's extremely important to just again highlight that capital is important. So to the point that the Ghanaian president, I think that most Africans have been quite nice. Is actually, if you think about it, and excuse my language, it's quite criminal that we are in this type of pandemic and that African countries are paying so much into their interests. You know, if you think about the spending in Europe and US in terms of supports that they have, whether it's monetary or fiscally, and you compare it to the numbers that we are talking about Africa, it just doesn't make sense. So this world, we're clearly living in a world where Africa has left to its own, and that is the reality of it, which is fine, but that's a reality. So some has happened, but it's nothing. It's if you think about it and if you compare it, what has been spent in those countries themselves, it's really ridiculous. And the seeds are being put here for, on the positive side, more focus on Africans themselves and understanding they need to figure it out themselves. But at the same time, the worst case scenario is the rest of the world will pay the price for countries who are gonna fail to live up to the challenge. They will pay the price, and that price will be far more significant than the amounts that the African countries have asked for. So I think we just have to put this as a note. In terms of Sundry Foods.
Not to interrupt you, Zin, but just to put a figure on it, the total relief so far is about 6 billion for African countries, 6 billion.
Yeah, and you know how much has been happening in the US. If you look, 3 trillion on the fiscal side alone, and another 3 or 4 trillion on. So I think just we have to take sometimes a step back and just realize what is happening, and that basically Africa has in no way, from my humble opinion, supported all the discussions. From my humble opinion, they if you sum them up, they really is close to zero. And again, that we need to understand that, and we need to accept that, and try to figure this one out. But the reality is nothing has been really given to Africa. So that aside, I am a big believer in capital. I think capital is a huge potential lever that can help Africa to develop. Capital is a big missing currency and a missing tool in what African countries are trying to do. And private capital specifically is, of all the things, the best thing, because when you align with entrepreneurs, and it doesn't really matter which sector, whether it is digital ICT sector or food and beverages or agriculture, it's really important that we try to put capital to work for entrepreneurs who are finding solutions to African problems. The case of Sundry Foods, as I said, we put in very little money. That's the reality. I will not give the amount, but very little money. We were able to support and be a catalyst for creating 2,000 jobs, close to 2,000 jobs. That is something which you really need to understand. Direct jobs, the indirect jobs is probably around 5 or 10 times that figure. And why it was a success is, first of all, because the entrepreneur was great. The entrepreneur is a guy who has a finance background, moved into, did a master's in hospitality, and then said, let me focus on serving the local consumer that I understand with a local product that I understand. And let me try to be resilient. Let me try to create a business model which works and allows me to avoid currency devaluation or economic problems. And he has been very successful with it. He has been focusing on cities which are very often underserved. Like in Nigeria, as you may know, there are many, many big cities, but most people focus on Lagos. I always say Kentucky Fried Chicken, they didn't start their business in New York. They went in Kentucky. So I think these type of things are very important to realize that these type of business models, sometimes if you fix them on the urban centers is not always the best thing to do. And then the final thing I really have to highlight is also inequality. Inequality is very important. I think the youth and getting women and men a gap to go to zero is very, very important. Youth is a driving force of anything that we do. So we need to take that on board. It's whether it's from a product side, from an investor side, from an education side, these people need to be part of the system. They are the majority anyways. So how can you have a majority which is not represented in business, not represented in any other sectors? The same thing for gender. Gender is a missed opportunity. It's not because necessarily, it's not because we want to do good. It is critical. When you get women to work and again, being represented and being able to contribute to the local economy, you will be able to go faster. And especially in Africa, where women traditionally played a very big role, and many African countries actually are already leading. So we don't need to go outside to look outside. We can study examples within Africa. Countries, for example, like Rwanda, to just take an example, where we can learn from African examples and best practices and try to implement that. I would leave it like that.
No, thanks for those insights. And now let me come to Sangu. Sangu, you mentioned in passing an example of a startup that has done extraordinarily well. I tried to catch some of the details. I think it's called Pesa, something along those lines, but a digital startup that has been snapped up, as these startups tend to do. But perhaps you could just elaborate a bit on the conditions for this success, this extraordinary success of this this example that you gave. But then also, if you could share with us your ideas or how this spread of digitalization across the continent can become more inclusive, and what you see as the sort of policy challenges for that.
Absolutely. Before I jump into that, I thank you, Zen, for pointing out the fact that there are a lot of examples on the gender side from the continent. In general, I think we need to sometimes be careful about the rhetoric and how we talk about certain things. There's so much nuance, especially when gender comes up. There's sometimes a sense in which the African woman gets caricatured, right, as this beast of oppression. And that is problematic, right, as well. I think that in Ghana, for example, I'll tell you, in Ghana, Ama Ata Edu, the great scholar and feminist, once said that the only foolish woman is the woman who's going to rely on her husband, right? Because Ghanaian women have been known for their entrepreneurship from pre-colonial times. I was attending Ashesi University's graduation, and the computer science department, all the summa, the magna, the cum laude, were all women. And so if you take the global idea of there are no women in STEM and you sat at that Ashesi graduation, you'll be confused. So for me, I think there's a sense in which, generally speaking, we need to dig into the data, right, and make sure that for whatever it is we're talking about on the African perspective, we're data driven, and we're actually discerning and making sure that we're not just buying into certain global representations or rhetoric, but we're actually basing it on what our nuanced realities are. On the digital divide, I think that something has been happening in the last 5 years. So next year would be about 15 years that Golden Palm Investments we've been investing in. And what we've seen in the last 5 years that has been very different from the prior 10 has been an ability for tech startups to scale at a level that's unprecedented. And so Paystack, I mentioned, went from 0 to $200 million acquisition in the space of less than 5 years. And this is not a story of just picking up one anecdote and saying it's just them. I can go down the list. I can talk about Flutterwave, M-Pharma, Soko Watch, and what they're doing in East Africa, where they're able to use their tech to aggregate all the different players in a fragmented supply chain and therefore reduce prices. M-Pharma, and using their technology to reduce the price of drugs. You're seeing, now that we have 1 billion+ mobile subscribers, right, you actually have that layer that creates a lot of opportunities. And of course, to your point, we do see, to a certain degree, there are some, again, there's nuance there, because there's some inequalities where you have the digital haves and the digital have-nots, but it's not necessarily it's not necessarily neatly applied across socioeconomic lines. In fact, it will be probably more applied around age lines. So young people, rich or poor, are very digitally savvy. They're digital natives, right? So it's not as it's not as clean in the way it's creating these sorts of inequalities. It's more around the digital natives and people like my dad who are now being forced to figure out how to use his smartphone. But as we know already, that what's powerful to me about tech and what I'm seeing in the digital landscape is its ability to drastically create scale, reduce cost, create efficiencies, create data from which you're able to do lots of interesting things. And I'm seeing this across the board. So for the opportunities I'm seeing is less the tech in the Silicon Valley way of someone who's going to start an app or start an Instagram, and more, I'll say, more tech-enabled businesses where people are using tech as a moat to become more competitive. But what's interesting is if you look at what's been happening on the VC landscape, we had in 2014 we had about $400 million in VC dollars. It increased to almost $2 billion in 2019. But if you unpack those numbers, only 20% of that is from African firms. 80% is from outside Africa, right? With 42% from North America alone. And that is what's creating a bunch of interesting things in the landscape. So if you look at who is getting funded, of the 31 startups last year that raised over $1 million outside Nigeria and South Africa, only 10 were companies started by Africans. Right? Kenya is the worst offender. Like, Kenya is a situation where virtually all the startups that raise over $1 million are foreigners. So there's an interesting dynamic that's also happening there in terms of, so tech is exploding in a good way, but there's a sense in which who is included and who's left out, who's being funded, who's left out. And what I say to that is, I don't say that to say American firms and European firms shouldn't invest in people who look like them. I mean, we see that from a lot of the research, right? You see heading and homophilia and all these phenomena play out. But what are we doing as Africans? The European and American venture capital firms, who are their LPs? Their LPs are their pension funds. We have hundreds of billions, if not trillions of dollars of pension funds that could very well be the anchor LPs to create an entire vibrant ecosystem of fund managers that will go on to invest in these startups to create the jobs we so badly need. But instead, our pension funds are investing in government bonds. And so we simply cannot create the tech economy of tomorrow that will be owned by Africans when our own institutional capital isn't investing in this. So that's one place that I think, to your point, Dr. Luke, of where policy can play. I think that's one place where policy can play a big role. And then the last thing, and I'll stop talking, is most African startups, and we're guilty. In fact, we push all our companies to do this. Most African startups that have done well or have raised capital are incorporated in the US, in Delaware. Why is that? It's not because they like Delaware. It's because the US has the QSBS, right? An IRS code that says that if you incorporate in the US and someone invests in you, up to $10 million tax-free. And so just think about that. If I'm a venture capitalist in the US and I'm choosing to invest in a company that's not incorporated in the US, all things being equal, same company. The US one, I get $10 million tax-free. The other one, I don't. And so there's a sense in which the policy environment, right, in the US has been structured in such a way that it makes it easy for capital to flow there. Versus Ghana, where if you want to set up in Ghana today, the GIPC law says you need a minimum of $500,000 if you're coming from external. So our policy environment, our laws, our regulations needs to change to adapt to be able to create a landscape where we can have a flourishing venture capital industry, a flourishing tech ecosystem, and we can use both tax policy and a bunch of other policies, affirmative action policies, to create the sort of redistribution that we would like to see to even out the edges of some of the inequalities that inevitably would arise. Thank you.
Yeah, thank you too, Sangu, for those further insights. Certainly, I think this is a good pivot now to Admasu, since you ended up talking about some innovative financing solutions and so on. And here, just two things. Firstly, I think Admasu would agree that for any finance minister, even an extra dollar does create some space in the budget and in the in meeting financial obligations and so on. So of course we know that in this crisis, relatively speaking, the amount of funding has been somewhat disappointing, but nonetheless, it's I think we agree with you that the IFIs have come through. And most importantly, I think also from the IFIs, you sense a policy shift in terms of how they're looking at global financing, and particularly from the IMF. I guess it has to be said that one can sense a significant shift. Nonetheless, I think Sangu does raise some valid issues here, and if you're not, we're not expecting you to divulge any information that you shouldn't. But I think this would be a good time for you to tell us a bit more about this special purpose vehicle agreement that you're working on in Ethiopia, as you said earlier. Perhaps you could talk about it in general terms, not maybe specifically. But I sense from what you said that this is, this could well be an example of these sort of more innovative ways of bringing finance to bear where it's needed. But I just leave it to you as how you want to approach this, because I do understand that bankers need to be very careful what they say publicly. But nonetheless, do tell us something about why you are in Ethiopia.
Well, thank you again for the prompt and the question, Dr. Luke. Maybe just my first remark is just to sort of circle back to what Zin had said. I remember in the US elections a decade or so back, there was this phrase, "It's the economy, stupid." I suspect some of you will recall that phrase. And I think what Zin is telling us, it's the capital, stupid, right? So it's true. I mean, a capital is everything. And I think Sangu has just gone to length about a particular form of that capital that is sorely missing in our continent. And I think it's very sad, but it is a very difficult reality that he's referred to. I've also been advocating for more venture capital. We've seen private equity come up a little bit, but there's just very little venture capital around in the continent. And I think he's spot on, because the types of institutional investors that should come in and give a little bit of allocation to that specific asset class, if we can call it that, I think really is something that we should continue rallying around, because I think there is African capital. This is a different era now. 20 years ago, we wouldn't be talking seriously about African capital. Now, pension fund capital alone, is on its way to $1 trillion, right? I mean, and maybe just to say something to Sangu, I mean, imagine if pension funds don't even have the appetite to invest in infrastructure and in banks that are considered to be low risk compared to venture capital. Imagine what kind of mindset it would take to go into VC, right? Because I mean, even in our particular mature space, it's not been very easy. Actually, it's been very difficult. I think we are one of the very few banks that have been successful in attracting pension capital, and we had to do a lot of reforms. We had to invest heavily in actually building confidence, demonstrating track record, and so on, because pension funds have a particular risk appetite. They're not prepared to take a certain amount of risk, and of course there's policies that bind the decision makers. But I think all said and done, there's definitely need for more attention and a hard push. Actually, I think the policy framework can help pension funds, both from the regulatory side, but also the ecosystem, as you mentioned. I think it's a very important issue. There's limits to how much banks like us can do to support SMEs who actually need risk capital, right? Because the real problem out there is risk capital. I mean, sure, debt financing is also an issue, both in terms of cost and access. But I think the much bigger gap is risk capital. And so people like both Zin and others who are moving a little bit, lower down on the threshold, very welcome. And I think this is the kind of thing that we really need to all keep advocating for. But of course, coming back to the specific question of this special program we're shaping here in Ethiopia, we just happen to have been fortunate to attract a strategic funding partner from the EU that is prepared to work with us on an unconventional program that allows us to reach SMEs, basically women and youth, but also other deserving SMEs, as may be the case, and to give them special purpose funding that would not be as strict or sort of collateralized in the same way that normal finance is. And what we're going to be doing is we're going to be working with a number of banks, commercial banks, private banks that have very strong networks in this regard and can reach a whole bunch of SMEs and in the populous regions of the country where we know there are significant opportunities. And so yeah, I think it's too soon to say, but we'll probably be sharing more as we go along. We're starting with a 10 million euro package in terms of volume, and it's going to be very risk orientated. So it's not going to be typical bank capital that, of course, has to, fulfill specific fiduciary requirements and make sure that, you're operating as a bank is required to. But so yeah, it's going to be a little bit different, and we actually are doing this on the back of another very successful SME program we rolled out 3 years ago. And what we basically did is we went to a number of microfinance institutions and other commercial banks who work with much smaller players, and we basically said to them, look, we know you're doing great work, you have limits to how much more of that you can do. Here's what we're gonna sign a deal with you. We'll share your risk 50%, double up on what you're doing, and we don't even have to give you money, and you don't have to take it in hard currency and create debt sustainability problems because you're lending in local currency, and we tend to be a dollar-based bank. So we basically said to them, look, just go and do more of this. Let's agree on some parameters. And when the hits come, we'll share it with you. So your risk exposure will be less in actual terms. And so they've scaled out and they've rolled out even more. And we're seeing that this has turned out to be a very good and fast way to actually roll out, because when you try to actually do it yourself, there's a lot of build-up time that's required, and there's a lot of transaction costs, and not everybody's well suited to actually reach a lot of small players. So working through aggregators makes a lot of sense, and that's what we've been doing. And actually, in a COVID world, it makes even more sense because, as you would know, doing due diligence and setting up meetings, traveling, going around to try to see who you can channel funding through, it's been very difficult this year to do that. And so this is another reason why, if you have some good local partners, you just work through them, and you just use them as intermediaries who can move quickly. I think technology is also helping, because in some cases, of course, it may not help the inequality issue, but there are a number of big players who actually have a big impact on small players. So in the agricultural space, for instance, critical inputs, are of course heavily consumed by also small players. And just by having security of supply, ensuring that the flow of commodities continues, you're actually also making sure that they're not disconnected. And we had difficulty because when there was this lockdown, it was not easy to actually transact. Of course, we all talk about digitization, but we all know that contract law and policy frameworks, how the realities and the practicalities of doing, legal business through digital forms requires an enabling policy and legislative and regulatory environment, and that's not been in place in many countries. But we actually were one of the first banks to do a blockchain-based trade finance deal last year, and it was an experimental step for us. And then when COVID came, it became actually the way to go. And we scaled up, and we've done almost $100 million worth of blockchain-based trade finance business. And it just dramatically cut down the time it took to close deals, right? And it helped that, of course, we knew who the counterparts were. These were not brand new counterparts, but I think we didn't have to go through the usual paper-based system, right? You're able to get all the parties, one in Asia, one all the way in North Africa, and then us in East Africa, doing a simultaneous transaction through an open ledger blockchain type of platform that made it easy to cut down the turnaround time from 6 weeks, in some cases 12 weeks, down to 2 hours, right? So this is a practical example for us. I mean, even us internally as a significant corporate, embracing digitization and getting much more efficient. But there's a lot that needs to be done, and I think we need so many more Zins and so many more Sangus to actually play at the level of risk capital, which is where, unfortunately, banks like us are not designed to play in that particular space. So I would love to help as much as I can on the co-financing side if there's something that comes up that we can blend our money with yours, folks, and try to reach higher scales that way. But I think risk capital is a big gap. And maybe David, this is something that you can help beat the drums on, because really that's a very sore issue in this continent for our young.
No, thank you very much for that. And, I think I actually got more than I bargained for in putting this question to you, because I think you've touched on a number of issues, regulatory gaps, challenges that are there, and policy framework, as well as, of course, efforts to address inclusion in this particular deal that you're working on in Ethiopia through taking fully risk into account, but reaching out to SMEs, women and youth, and then of course also how this example of how fintech can be used, blockchain and so on, to impact on the real economy. So I think some very good insights from all of this. And by the way, let me just make a small advertisement here that the latest economic report on Africa from the UN Economic Commission from Africa, it does focus on these issues. Especially the policy, regulatory aspects of innovative financing, of utilizing access and utilizing pension funds, etc. So these are all sort of very key issues that are covered in that report. We have time just for a few questions that have come through the Q&A chat box. The first one is from a lady called Elizabeth Babur, and she's asking that, building on your comments, could you also comment on cross-regional efforts and opportunities, especially with former Francophone areas and the Maghreb? I don't think I would, I'll just put this to all of you, perhaps from your experience of dealing across the continent, the Maghreb, Francophone countries, Francophone, Anglophone countries, etc. Maybe we can start with you, Zin, and then to Sangu, and then Lily, and back to Admasu. Zin.
Yeah, I think what is really nice is that to rediscover old trading partners. I think that is something which it took us a bit of time to get it right, but increasingly we start to see inter-regional, inter-country, and also certain regions working together. The Maghreb and French-speaking Africa specifically is a very natural region for trading and for investments, and is already facilitated right now by inter-regional banks and international investments. So I think something which is extremely important to highlight, that there is a very solid base for making that happen. And I think we have started to see the first leg of it, if you look at the financial services and telecom, but I think there's still a long way to go. I think there's also lots of students which have been studying in different countries, for example, from, let's say, Ivory Coast or other countries in Morocco, they meet each other in France. So I think in that sense, that colonial language of French has some benefit in the fact that it's allowing people to connect, and so I see more of that, and I see also a lot of companies. Many of the companies, whether big or small, they typically have a regional story in their mind. So if you speak and you interact with people, a lot of corporates, SMEs, and big companies are increasingly focusing on that.
Yeah. Sangu?
Yeah, so a couple of thoughts I have there. Look, the first I'll say is, I think that Francophone, I agree that when you think about it, especially as one unit, there's with the currency harmonization and those sorts of things, it presents certain opportunities if you're already there. When you're not there, there's a challenge. So for me, we're currently in Ghana and Nigeria. We just expanded this year to Kenya. The natural order, given ECOWAS, would be that we should have moved to Cote d'Ivoire, or we should have moved to one of the other Francophone countries. I mean, Cote d'Ivoire is a large economy, but it's easier in some ways for me to add Kenya than for me to add Cote d'Ivoire, because there's a sense in which the Anglophone countries have Anglo-Saxon law, similar legal systems. The French system is so different from the English system, right? Just the regulations, right? In healthcare, for example, I'll tell you that there's a bit of some harmonization among regulations, and I'm seeing Zen smiling. He probably knows exactly what I'm talking about. You see some harmonization with the regulations and stuff in these countries. But when you cross over to Francophone, it's so different that sometimes that sort of scale can create what I call diseconomies of scale, where you end up having to have more complications and higher cost scaling there, just because you now need to have different managers, different systems that are adapted to that. And so that's one challenge. And it's quite unfortunate, because if you also dig, going back to the VC data shared, if you dig into it, Francophone Africa is being left out, right? Most of the entrepreneurial stories of success, most of the funding, most of the attention is being dominated by the Anglophone countries. And you're seeing a gap. And so that's something that I think actually needs to be addressed. And it's really important, I think, to address that. So the other thing I'll say is, in as much as we might talk about different countries, the truth is, I think more for me as in the business, I actually, even though I say Ghana, Nigeria, Kenya, I'm really talking about Accra, Lagos, Nairobi. And in a way, there's a sense in which urban Africa creates its own homogeneous set, right? Because you have more in common. You have a greater overlaps between Accra, Lagos, Nairobi, Abidjan, than within country, within Nigeria, right? And so there's a sense in which I think a lot of entrepreneurs, myself included, when we think about African scaling, Pan-African scaling, we're really focused more on these urban centers, which is where the bulk, Lagos, for example, is virtually a third of Nigeria's GDP, right? And so from that perspective, and especially because of the lack of infrastructure, transportation, and otherwise, and connectivity across board, you tend to see concentrations of these scaling in these urban centers, which introduces new challenges, right? When we want to talk about inequality, you're going to see, I think, inequalities within countries where you're going to see greater focus on these urban centers, and then who's left behind.
Yeah. Thanks, Sangu. Lily?
Thanks, David. I think a lot has already been said on the Maghreb and Francophone countries, so perhaps I'll just focus my response more on the cross-regional initiatives and how they build upon the cross-border initiatives. I think particularly within the pandemic period, we've seen regional economic communities play a very, very key role in responding to the crisis, and particularly in coordinating cross-border management responses. The SADC region, COMESA, East African Community have all introduced dedicated guidelines to facilitate cross-border trade amid the pandemic. In the East African Community, the EAC has introduced a common test certificate for truck drivers in the regions that allows these drivers with a negative test certificate to move across as many border crossings within the region over a period of 14 days. So I think these cross-regional efforts have really proved very beneficial in facilitating trade amid the pandemic. And then perhaps looking more towards the continental cross-regional efforts, we've really seen the Africa CDC play a crucial role in solidifying continental supply chains and coordinating COVID-19 responses, particularly with regards to pooling resources and pooled procurement to ensure that the necessary COVID-19 medical equipment and response equipment is in place. And at the ECA, we've actually also been working with the AU and Africa CDC to develop an Africa medical supplies platform, which is really focused on enabling the identification, payments, and fulfillment of critical medical equipment that's authorized by African government entities. So I think these cross-regional responses have been very critical within the COVID-19 context.
Yeah, thank you for that, Lily. And I'll now turn to Admasu, and here I'm going to bunch two questions so that we can begin to wind up. And the first question is from Nasiza Masikini of Prince Trust International. And he's asking, what do you see as the opportunities for the future of work in the continent, especially as it pertains to young people? Then also from Ruth Kinyua, we have this question that as the rollout of vaccines begin, and Africa has not developed a vaccine, but will be expected to align with the rest of the world on this issue in 2021. What are your comments on the future of African research, scientific, technological, agricultural, etc.? So two questions that I've rolled into one. And Admasu, let me start with you. The first question, of course, builds upon what you've been telling us about some of the initiatives for SMEs, youth and women. But over to you. Yeah.
Thank you, Dr. Luke. I hope you can hear me now.
Yes,
right.
Absolutely.
Yeah.
Yeah, please go ahead.
Yeah, again, very good question on the future of work, of course, especially for young people. We know that formal employment is a huge problem in this continent, and it's not going to be a solution that's going to really make a difference. So I think we have to keep pushing on the entrepreneurship, the livelihoods agenda of things, and of course make sure that the MSMEs are getting a lot of support, but also we support the ecosystem around those kinds of areas where you could absorb larger numbers of people. I think the whole agricultural sector holds huge promise for sort of SMEs to come in a way that has not been the case in the past. I think agriculture and food, whether it's retailing it, but most importantly, adding value to it and getting so much more labor onto land, right? I think there's many ways to do that, and I think that's, for me, the low-lying fruit for Africa, really, because we import so much of our food, right? And I just think there's so much opportunity around that. And then, of course, I think there's a lot of urban-based entrepreneurship, both at the service industry side, but also light manufacturing. If we create strong incentives and enable, the capital to flow, again, to use Zin's big point around capital, support foreign direct investment to come in and to build those industries that actually can compete with the previous big centers of industrial development, so that there can be absorption of our labor in the more formal sense. We have to take multiple prongs to this very complex problem. I think even big, well-capitalized African economies like South Africa, where Lily is, you have unemployment there formally at over 30%, right? So if South Africa has an unemployment problem of 30%, and they have one of the best levels of capitalization on a per capita basis, what's the rest of Africa to look at? I think the rest of Africa has the one big opportunity around access to land, agricultural land, and a lot of that land being arable, and a lot of them having access to water. and also the regulations being very light and easy to unlock those opportunities. And I think, you know, those countries have to look at their own endowments and take advantage of that. But it's a complex problem, and we need multiple prongs to that solution.
Yeah. No, thanks for that, Admasu. Lily, on both the future of work, youth, and also research, future research and technological developments.
Yes, sure, David. Yeah, I think on the opportunities for youth, I think there's, of course, we've already spoken to the youth unemployment problem. Some of the modeling we've carried out at the UN shows significant new jobs in a range of sectors that we expect to materialize under the Continental Free Trade Area, covering agriculture, manufacturing, and services. But I think what will be really critical is to have those complementary policies for skills development to ensure that youth have the necessary skills to fill these new jobs that may be created under the CFTA or in the context of the new digital economy. And digital skills will be very, very critical here. On the issue of a vaccine, of course, when a vaccine does become available, we know that it won't be available everywhere, and it won't be distributed equitably. So it will be really important to try to ensure that this vaccine is available on the African continent. And I think what will be critical here is coordinating a request for flexibilities under the TRIPS agreement. And this is something we've been pushing for at the UN. So I think the intellectual property rights discussion will be very key moving forward.
Yeah, thanks for that, Lily. Sangu?
Yeah, sorry, I was mute. Yes, I mean, look, I concur with the above, and I think that ultimately tying it back to some of the comments I shared when I was talking about the landscape, I think that there's a lot of room for policy, and that's the part that I think is quite critical and important. Where and it's a low-hanging fruit, right? Where we can actually leverage policy tools to be able to help create these right types of environments. And that'll further all these things that have been discussed. And so, I think we need to see, it can't just be, for too long, we've kind of had this almost separation of private and public. And in some ways, the private has just avoided the public sectors, like you want to get out of the way. But I think it's really critical and will allow us to actually have a much magnified and amplified impact if we're able to really leverage policy for all the things that we've discussed today. So I just really want to emphasize that.
Yeah, thank you for that. Zin?
Just to take a step back and capital to the points that have been highlighted in many different ways is extremely important. According to our estimates, $1 invested could create 150 to 200, $1 million would invest 150 to 200 jobs, sustainable jobs, for one investment, 1 million. And we think that the impact of that in the wider economy around 10 times that. So basically you invest 1 million, you create 100 to 200 direct jobs and potentially 1,000 to 2,000 jobs. So I think it's very important to have that thinking there. Trying to get capital into the local economy, so supporting local entrepreneurs is very important. As Sango has said, there are pension funds in Africa that can contribute to that. That's the reality of it. I mean, we have Nigeria alone has around $40 billion or $30 billion, over $30 billion, and most of it is in bonds. So I think in that sense, having 1%, 2%, 10% of that going back to local entrepreneurs would be a big win and would be a big accelerator. And I think at the same time, there is a lot of positive things happening. A lot of the things we were talking about. The problem is with policy, sometimes it gets too complicated. The problem gets too big. I'd rather make it simple. And there are local SMEs who are finding solutions and local success stories. So I think we rather, instead of trying to figure out a top-down problem, a top-down solution to a big problem, let's just try to follow what the SMEs are doing and trying to support them, because they are fixing it as we speak. They are fixing issues on the agricultural side. They are fixing issues in import substitution. They are fixing issues on the technology side. People are doing that already because people are naturally entrepreneurial and people are naturally very creative. So I think that's really what we need to do, is trying to get more attention to those sides. And luckily, the positive is when you start to build some type of a level of maturity, all of a sudden you can go to the next side. As we speak today, for example, one of the Moroccan companies intends to produce the vaccine. So they have a partnership with one of the Chinese firms for the vaccines, and they want to produce it locally in the second round. So in that sense, and I'm sure that our South African companies absolutely capable to potentially Ghanaian, there are people who can do this. I think that's, but as a government, what you can do is go to these companies, tell them, what do you need? I mean, as we speak, and something to highlight, the head of WHO is an Ethiopian person. The head of RepSpeed in the US is a Moroccan-born person. So Africans have the ability. What sometimes is missing is that we try to make the problem too big. If you would go and speak to local healthcare companies and say, okay, what do you need, for example, to go to step 2? So instead of trying to make the problem very big, trying to support local bottom-up initiatives. And as I said, there are some big problems that we're facing, but sometimes the solution is, or at least the catalyst for a solution, is closer to us or closer by than we sometimes anticipate.
Yeah. No, thank you for that. Yes, indeed, that's often the case. You're quite right on that. I fully agree with you. Now, I think we've come to the end of our time together. And by way of wrapping up, I would want to ask each of you to share with us in 1 minute or less your final takeaway on this issue of economic change, finance, trade, and investment in Africa in this COVID and context, and looking beyond COVID. So let me go back to the way that the order in which we started this conversation, and so I'm going to go back to you, Zin, since we're going alphabetically, the order of the last names, and for you to give us your final take, your last parting shot, so to say.
I think just as a final shot, I think really we have to say that Africa has done a relatively good job during a very difficult crisis. I think we can build on that. We can build on that by bringing capital to things that would create the most and the biggest catalyst. And I think that we should be, we should be positive in that regard, but at the same time, be very clear what the problem is. The problem is a capital allocation and a capital generation issue. So that is my humble, let's say, key point to highlight during this call.
Yeah, no, you've been very consistent on that, on the capital issues throughout this conversation. Sangu, your parting shot.
Yeah, so as Winston Churchill once said, never let a good crisis go to waste. And I think that this is a great opportunity for us across the continent to really use this to bring about a lot of transformation. And we've seen from throughout this conversation, capital matters, right? Technology matters, inclusion matters. But for all these things, and to actually for you to attract capital, allow capital, for us to be able to have the sort of redistribution and shared economic prosperity, and for us to be able to allow the acceleration and proliferation of technologies, policy matters. And so it's important that we ensure that we have the right policies, the right regulations, the right laws, and we create the right frameworks to allow for all those three things thrive and flourish on our beautiful continent.
Thank you for that, Sangu. Capital, technology, inclusion, and policy matters. Well said. Lily.
Thanks, David. Yeah, I think just to echo what other panelists have already said, I think, yes, Africa may be facing difficult times, but there's also cause for optimism. We've seen a lot of positive shifts amid the pandemic. We've seen a move towards more domestic and regionalized production. We've seen a shift towards digitalization. We've seen firms adapting and innovating to new challenges. And the continent's also gearing up for start of trading under the AFCFTA. So I think there's also a lot of reason to be optimistic, and the continent can really use the pandemic as a point to reflect and really move forward on some of the long-standing challenges Africa's faced, and really move forward on the transformation agenda under the AU Agenda 2063.
Thank you for that, Lily. As we look towards the end of the year, it's a good note on which to end, note of optimism. Admasu, your final shot.
Maybe just one word on capital. I guess I'm a banker, so I would have to come back to that. But just to remind everybody that capital is multidimensional. It's not just financial capital. And I think we've picked up on a couple of other themes during this panel around institutional capital, human capital as well. These other two forms of capital are actually very important to unlock the financial capital that we know drives fixed capital formation and gives all the enterprises the firepower that they need to actually get things done. But the ecosystem really is essential. And I think, unfortunately, we have some heavy lifting to do in that area because our continent really has yet to get that right. So the piece has been dealt with. The AU is talking a lot about getting the political framework right and make sure that there's that enabling environment. But really, I think the institutional and human side in particular, the institutional part is really the obstacle to getting the financial flows to happen, actually. So I think we need to keep highlighting that one. Thank you.
Yeah, thank you too, Admasu, for that. I think a note of realism to temper the optimism as we look to the end of the year. And yes, indeed, the ecosystem, we keep coming back to this, institutional and human capital to leverage financial capital. Well, lady and gentlemen and others who have been following this conversation, thank you all very much for joining us. And let me also thank Sangu Dele, Zin Bekali, Lily Sommer, and Admasu Tadesse for what has been a very interesting conversation. And I've been delighted to be your moderator. And look forward to interacting with you in one way or the other as we enter into the new year. So thank you again. And my thanks also to the LSE colleagues who have put this together, in particular Ikena Acholonu, and also to KC Apia J. So thank you all, and have a good holiday, and look forward to being in touch. Okay, thank you all. Okay, bye. Bye.
Thanks, David. Thank you, everyone.
Thanks. Yeah.
Thank you, Lily. We'll be in contact soon. Thank you for joining us.
Thanks, Ikena.
Take care.